Also, traders and friends, what I want to do over the next 5 minutes or so is just address some of the broad market weakness, taking across many of the highly followed securities out there on the US equity markets. Those particular stocks, in this particular instance, are Disney, Gillette, Home Depot, Starbucks, and also Target. I see a lot of perma bulls on these individual stocks, and it's a time right now, at least, to be seriously considering stop mitigation or stop loss allocation, and also the opportunity to look at these stocks with a different perspective. The reason why is because a lot are looking as if they are set up to roll over and they are beginning to break to the downside. Let me explain just a little further. As you can see, we'll start with Disney. Disney's been in somewhat of a pretty nice little bullish trend since the earnings gap going back to early February. You can see that we've sort of been making, a pretty choppy little bullish trend here, eking out higher highs and higher lows. It ticks all the boxes for a bullish trend, but when you bring up this technical signal called divergence, MACD divergence, it's very, very important that when you see it, you at least look at a stock more cautiously. What this is that when the stock makes the higher highs, MACD makes the lower highs, right? It's diverging. It's what we call bearish divergence. You can see that since then we've pulled back down. Most recently, about the end of March, we've pulled back down. We've set up what we call looks like a little bear flag. You have a shooting star candlestick during yesterday's trading session on such a strong broad market rally. You can see right here we have another, some form of a shooting star. It isn't a textbook, but a dark candlestick, long upper wick. We've got 4 candles after this one dark down day, all suggesting that there is continued selling pressure coming in on Disney. Now, right now, however, it's a little bit premature to be shorting this. The reason why is because we are still above key levels of higher swing highs or higher swing lows, and also the 50-day exponential moving average. Generally, stocks will come back down, will sort of end or continue into a chop fest, make a little move higher, make a lower swing high relative to the most recent swing high in March, and this will be the shorting opportunity maybe in 2 weeks time on Disney. At the moment it is looking horrendously weak, and I wanted to bring that to your attention. GILD is some form of a similar stock. You can see the symmetrical triangle right here. It really looks as if it's starting to break out. Volume today, increased or at least expanded somewhat. It still needs more to go until we can really, convincingly say that this is going to move much lower. We can get a measured move based on this wave rotation from here to here. I think I did this about a week ago. It came out at around $15. You can start projecting a $15 breakout from here or here, and you're going to get a target, much, much lower. I think around the 75 figure or $70 figure. And on the bullish side, I can actually bring this down into perspective. There you go, 76.53 and 123 from the breakout. The only thing we need to contend with right now in the way of a bearish trade are these 2 areas of support. You've got one here, and also a little swing low over here. So I'm really looking at maybe a 95.13 entry. That is my own personal setup. At the moment, it is not open in my account. I need to wait for some additional signals before I place that open contingent order. Let me move into HD because HD is notoriously exhausted right now. I mean, we had another earnings gap up. It looked like a continuation gap. We immediately fizzled out. We came back down and we filled the gap. You can see right here on the 10th of March, we filled the gap. And since then, we got a few nice bullish candlesticks. It looked as if everything was A-OK, it was going to continue. We got the inside day on the 23rd, the shooting star, the gravestone doji on the 24th, and since then we've pulled back. What do we see again? We see the bear flag, we see the upper wicks on the daily candlesticks, we see 2 consecutive shooting star candlesticks with an exhaustion gap, with of course the kicker, the bearish divergence once again setting up on HD. I'm not going to go into individual trade placement on HD or Disney. If you want, email me success@pivotpoint-trading.com and I can walk you through it in more detail. But these are just broad market weaknesses which I am seeing on some very past bullish stocks. It appears as though they are starting to set up maybe just intermediate corrections back down into maybe, the 100 level type of price until we see the primary trend kick back off, but definitely weakness on the minor level as we go through all of these stocks. Finally, we've got Starbucks here as well. Look at this, breaking out again. The earnings call was announced, I think, 2 weeks ago. Immediate optimism, but it's fizzled out the following day. And 3 days after that particular day, we saw the engulfing candlestick. Doesn't this look familiar again? Is this not the third type of signal on, I think, out of 4 stocks, excluding Gilead, which is in a symmetrical triangle, which has got a similar chart pattern to this. Can you see how we're connecting the dots right now, and you can see these exhaustion types of moves taking place? You can see volume expansion, not only bullish volume after the earnings announcement, but you can see the contraction, or at least, the expansion in the negative volume as well. This is all telltale signals that we are going to see a correction. I understand that's not going to sit well with a lot of people who only see green in the world of the stock market, but in reality, markets correct, so do stocks. And of course, they always pull back. They'll always pull back to more logical areas where people will be enticed once more to get back involved into the long side of the market. Pay attention to Starbucks. Very good chance this will be trading down at $91, even as low as $87 over the next month or so. All right, it's not going to happen overnight. It's going to happen over a month or so. And to conclude with, we have Target right here. Again, look at the same type of trading picture. Earnings was announced most recently. I forgot the immediate date of that earnings announcement. It was somewhere in this vicinity right here. Since then, we haven't really seen too much continuation to the upside, but you start to see these candlesticks. You start to see this candlestick in particular, these two most recently on Monday and Tuesday this week. And again, Target is looking somewhat the strongest out of the 4 above mentioned stocks which we've walked through. But having said that, you see these two most recent long, or at least long upper wicks, and you're saying, well, you know what, it isn't looking too healthy. And you combine that in again with this one right here and these engulfing candlestick types of patterns showing up. Volume expansion again on the sell candle today, indicating more people are selling at those upper levels. You need to start saying to yourself, well, if I'm in this long and I'm a trader, at least I'm a swing trader or a short-term trader, maybe I should at least consider placing my stop. Let me zoom back in. Right below the low of Friday's candle, maybe even below the low of, that's Friday's right here, the low of Friday, or even, that's Monday's candle, pardon me, or even below today's candle on Tuesday. So these are things which you need to pay attention to, and I'm just keeping you updated as I see them progress. Now, just to recap, there is broad market weakness. We're still waiting on the overall markets. Let me just bring these up for you right now. We're still waiting for the actual breakdown on the market, if in fact it is going to occur. This pivot point right here is key. Anywhere along this level, around 17,580. And if the market does want to continue its strength, you have to pay attention to this downward trend line whenever we come in contact with it until we break above here. And also break above these two swing highs. You still need to look at this market with a little bit of cautiousness in the way of opening up new bullish trades. I hope that makes sense. Email me again, success@pivotpoint-trading.com. I'll look forward to some emails from people wherever you are around the world. Have a fantastic evening. I'll see you all tomorrow. All the best. Goodbye.